Hello students. Today we are going to learn part 3, that is money and banking, chapter 3 in macroeconomics. So in the last sessions we had talked and discussed about money. So now let's talk about bank and banking. First of all, you need to understand what is bank. So according to the Banking Companies Act of India, it defines bank is a financial institution which accepts money from the public for the purpose of lending or investment, which is repayable on demand or otherwise withdrawable either by check, draft, or order otherwise. So from this we can make out that bank is a financial institution which is accepting money from the public in the form of various kinds of deposit, be it saving deposits or current deposits or fixed deposit. And whenever public demands, it is repayable and bank pays back the money of the public either by check or draft or order. Apart from that, we can also know that banking is something which also provides loan or it advances loan to the public. So it is not only providing a safe place to keep your cash, but it also advances the loan whenever we need it. So the loans which are provided, it could be short-term loan or medium-term loan or a long-term loan. So, according to the Section 5B of Banking Regulation Act 1949, it defines banking as accepting for the purpose of lending and investment, which means bank is accepting the deposits of the public so that they can lend and invest and deposit of money from public which is repayable on demand or otherwise and withdrawable either by check, draft or order otherwise. So we can say that a bank is said to be financial intermediary. It stands midway between the saver and the user of the fund. And of course, there are different types of banks which have some common and some of them have special functions. So we can say that banks are of various types such as commercial bank, central bank, development bank, cooperative banks and rural banks. Now, central bank, commercial bank and development banks are of primary importance. So when we talk about type, of course, we have Ministry of Finance, then we have RBI, we have scheduled banks, then it's again divided into commercial and cooperative, and commercial is again divided into public sector bank, private sector bank, foreign bank, and regional rural bank. And cooperative banks can be divided further into urban cooperative and state cooperative. So first let's understand what are commercial banks. A commercial bank is again a financial intermediary, and of course the objective of the commercial bank is profit making, and it takes money from a surplus unit by paying a low rate of interest and lends the same fund to the deficit unit or whoever requires at a higher rate of interest. So this way they make profit. So banks, you can say that it is said to be a dealer in credit. So they do create credit. It may be organized either privately or by the government. So commercial bank could be either private or government. And the major functions of commercial banks are accepting the deposit, advancing the loans. And as I said, and as I had mentioned earlier, that deposits may be of three types: demand or current deposit, savings deposit, fixed or time deposit. So these are the three major types of deposit. When we talk about the current deposit, it is mainly for the business or firms or organization as they require n number of transactions and daily transactions are more. So on the demand or current deposit, the interest is not paid. When we talk about saving deposits, interest is given to the depositor as this funds are part of the public income which they have saved it or deposited into the bank. So it is for the general public like us. And when we talk about fixed or time deposit over here, you can deposit the money for a particular fixed period of time, but you cannot withdraw the money before the maturity date. So let's say, for example, if you have deposited money, fixed deposit for 1 year, I cannot withdraw money before 1 year. If I do so, then the interest would be given less. So high amount of interest is given in the case of fixed or time deposit as compared to current and saving. We can see over here the commercial bank. We have different banks. I have given the examples. So these are the examples of commercial banks, which is giving and providing services not only to individuals but organization also, business houses also, and various other services also. So these commercial banks, when we talk about the funds which are obtained from various classes of people, are pulled together and lend to the holder of the capital. And banks do not lend the entire sum of deposit, but a portion is kept in the form of cash with RBI, and this is what we call it as CRR, which is cash reserve ratio. So cash reserve ratio is the amount of money or the amount of ratio which is given by the commercial bank to the central bank out of its total deposit, so that they can meet up any unforeseen demand in the future. So in its loans and advances, bank also maintains a diversified portfolio in order to seek a balance between liquidity and profitability. And apart from accepting the deposit and advancing the loans, they also perform some other functions, like they keep the valuables in their custody, collect checkable amounts, purchase and sale of shares, debentures, they act as an agent of their customers, etc. So as I said, that cash reserve ratio is the ratio which is decided by the central bank, and that ratio has to be given by the commercial bank to the central bank in the form of CRR. Let's say, for example, that the total amount of deposit which is available with commercial bank is rupees 1,000, and CRR, which is decided by the central bank, is 6%, which means that out of its total deposit, 6% has to be given by the commercial bank to the central bank, which is 60 rupees, which is CRR. So 940 is the amount which is remaining with the commercial bank. Now this clearly states that commercial bank can lend or advance loan only with 940 rupees, which is balance available, because the rest 60 is given to the central bank in the form of CRR. Now let's understand that what are the functions of commercial bank. Modern commercial bank performs variety of functions and provides a number of services to their customer. And they are regarded as a departmental store bank because they provide wide variety of services to their customer. So when we see the functions of commercial bank, we can divide it into two: primary functions and secondary function. And when we talk about primary function, the major primary or basic functions are accepting the deposits and granting loan. So as I said, that loans or deposits which are given, let's say when we talk about accepting the deposit, it can be in the form of saving, fixed, current, or recurring, and advancing the loan in the form of overdraft facility or providing cash credit or providing short-term, medium-term or long-term loans, and discounting bill of exchange. When we talk about secondary functions, it can be further divided into agency function and utility function. So when we say agency function, it gives the facility of transfer of funds from one to another. It could be from one individual to another, or it could be from one bank to another. It also gives a facility of payment of periodic payments, check collection because it collects check, and other functions. Now it gives us utility functions because it also provides us other extra facilities like lockers, wherein we can safely keep our assets. We have draft, underwriters, social welfare program, and the other functions. So first function, we can say that accepting the deposit. So people who have surplus funds with them, they would like to deposit these with the commercial bank because it is safe, plus they can also get the interest with the deposited money. So these are the various functions that are various, we can say that deposits, current account, saving account, and fixed or time deposit, which I have already explained. Secondly, it also performs the functions of advancing the loan, which is again a secondary function of commercial bank, and it provides a facility of providing short-term loan, which is for shorter period of time within 1 year, medium-term loan, which is up to 3 or 5 years, and long-term loan, which is more than 10 years. So bank these days extend loans and advances to their customers in the following ways. We can see over here that when we talk about the loans, bank provides outright loans for a fixed period. The entire amount of loan sanctioned is credited to borrower's current account, and borrowers pays interest on the entire amount he has borrowed. These are the other various functions which are performed by commercial bank, providing cash credit. So the entire sanctioned amount of loan by the bank is given to the borrower at a particular period of time. And the bank opens an account of the borrower and allows him to withdraw the borrowed amount as and when it's required. And bank, of course, charges interest not on the amount of loan sanction, but on the actual amount withdrawn from the bank. It also provides the overdraft facility. So the customer is allowed to draw checks in the excess of the balance standing to his credit. So for a businessman, the overdraft facility is easiest and most convenient method, because over here you can withdraw the amount which is more than the balance which is lying in your account. Another function is discounting bill of exchange. A bill of exchange is drawn by the creditor on the debtor, specifying the amount of debt and also the date when it becomes payable. And such bill of exchange are normally issued for a period of 90 days, that is 3 months. And the creditors cannot get it encashed from the debtors before the maturity of 90 days period. If the creditor needs money before the expiry of these 90-day period, he can get it discounted from the commercial bank, and the bank makes a payment to the creditor after deducting its commission. So when the bill matures, bank will get the payment from the debtor. Another function is facilitation of payment through check. Bank have provided very convenient system of payment in the form of check, and we can also transfer the fund from one place to another, and it also gives us agency functions for their customers. So bank charges commission for providing these services, and the main agency functions are collection and payment of credit and the other instruments, like they collect check on behalf of us, purchase and sale of stock exchange security. We can also say that remittance of fund, or it remits funds on behalf of client through check, draft and transfer, and representation and correspondence of bullion trading. So we just saw that commercial bank collects check, draft, bill of exchange, and other financial instrument. They also make and collect various type of payment, like payment of pensions, interest, dividends, and it also act as an agent for the customer and guide and help them in sale and purchase of the security, where the client if he does not have much knowledge about the sale and purchase of security, then commercial bank guides them. They also provide investment services to the company by acting as underwriters and bankers for the new issue of security, and sale of foreign exchange on their behalf, sale of national savings certificates, and units of UTI. So we can say that commercial bank is also acting as a trustee and executors. Like for example, they keep the wills of their customers and execute them after their death. There are also other miscellaneous services which are provided, like locker facility for the safe custody of jewelry and other valuables or documents. They also issue traveler's check, gift check, provision of tax assistance, and it is one of the major function is credit creation. This is very important and unique function of commercial bank. They have the power of credit creation. And in the process of accepting the deposit and granting loan, commercial banks are also able to create credit. This means that they are able to grant more loans than the amount of initial or primary deposits which are made by the customer. So in short, commercial bank performs varieties of function in modern economics. You can, in this diagram, you can see the locker facilities which are provided by the commercial banks. And we can also see traveler's check. This is an example of traveler's check wherein you don't have to carry money with you. Thank you.